Hello and welcome back this evening, guys. Welcome to today's class, which is on an introduction to commodities. And today we are going to be looking at things slightly differently. We looked at indices and forex trading last week, and we are moving into commodities now today. And commodities, they have certain indicators and certain market moving events that indices, forex don't have, and some of the other influential factors are things that I'm sure a lot of people will be familiar with and may have a good understanding with, and we'll get to those in a few minutes. But really, I want to discuss them in a broad sense. I mean, we all know about gold, we all know about oil, but how much do we know is another thing, and we're going to get to some of the real driving information within these markets tonight. So back to normal as well. Before we get stuck into it, we have our normal trade review today. So I will be passing you over to Nick, who will be taking you on the trade review, and he will obviously he will be watching what is happening with the Fed and listening to Yellen and trying to make. He'll have more information as this is happening as we speak. Whether the interest rate decision has gone through, it is something that is expected today. That is priced into the market. So if that does happen, and by all accounts it probably is, I'm sure some of you watching this now will know in the next moment or two whether that has gone through, and that's something, unless it's anything different, the markets may remain relatively inconsequential to that news. But if there's anything different, if when Yellen talks, if she gives any sort of indication that there might be less than expected amount of rate rises next year, that's all to come at 7:30 as well. So I know that people are keeping probably one eye here and maybe one eye somewhere else as well on another feed. But that's the night that's in it. These Fed meetings always bring that sort of attention to them. So from there, we'll move on and kick straight off into our class. And commodities, with the forex classes and indices classes as well, there are a few things that you'll clearly see and stand out, and the differences between them. Apart from the obvious differences, we will be looking at what specific. We'll look at a few specific commodities as well, but generally, why do they move differently, and how can we try to adapt and be aware of that as well? Because while sometimes we may look to volatility, we're trying to find the volatility, and the opportunities that volatility can bring. There's times when the market's too volatile, and we want to steer clear and try and avoid as well. So sometimes, especially with commodities, there are more of these markets that bring that sort of aggressive volatility due to data reports that come out all the time. So we'll get into that in a few minutes. The first commodity that we shall talk about is about gold. Now, gold is a market that those of you who have been with us for a few months now, or if you're just starting, this is your first month with us, you may not be as aware, but gold has been trading down a little bit over the last few days, but it had been ranging really nicely for us over the past few weeks, all the way back to the end of October, and certainly has been a profitable trade that we have enjoyed. As far as trading it, it is something that a lot of people will be familiar with and feel that when they sit down for the first time and they're trading, gold is always a market that people might take a look at and try to follow for the first few months of their trading. And absolutely, but they obviously know it for a number of reasons. It's a very popular item of jewelry. It works very well for industrial applications as well. I mean, it's a good conductor, as you can see, and it's used in a lot of circuit boards and electronic wiring as well. So it's got a functional purpose that drives up the value, and of course, the jewelry aspect of things. It certainly it certainly helps with gold. I mean, you look at all the markets when they're able to create products and such valuable products like this type of jewelry that gold produces. It's something that is very valuable. And when some markets you'll see, some markets might around the world, it mightn't just be Western markets, it could be Eastern markets as well. Any changes in discretionary sort of spending or income, if there's been a growth in that area in some parts of the world, you'll see that the demand for gold will go up in those areas as well. These are they make sense, and when you put two and two together, when you talk about the more discretionary income you have, the more electronics, the more jewelry you might end up buying, it's a no-brainer. But when you sit down and look at a chart, and you're looking at 10, you might be looking at 10 different charts and trying to figure out why did that sudden spike or why did that aggressively move, and you have to take things back to what is driving things, what is driving demand, is there supply there? And certainly when it comes to commodities, that is a core driver and a core function the way the market moves. So again, I mean, obviously these components all use and utilize what gold can offer. It's widely used in mobile phones and computers, TVs, and all electronics. You'll see on those little chipboards, if anybody's cracking open their phones or their computers, which I wouldn't recommend obviously, but you will see a lot of that in there. And that again is something that plays a nice part. Guys, if you've any questions, I know I forgot to mention there as I kicked off things, if you do have any questions, please feel free to pop them into the question box there as well below. And just to finish off here with what the uses are for gold in particular, I mean, why am I mentioning these things? It seems obvious, and again, it's to bring it back to when you are looking at at your charts, and maybe you're seeing these drastic moves in gold. It can be around the industries that it impacts, and when you do think about these for 2 minutes, a lot of the time that you'll be able to see why there was such an aggressive move. Another thing that we'll talk about in a moment is the correlated markets. And when it comes to correlated markets, you can see, and this is something that I'm sure people who've been trading for some time are obviously aware of, is where the dollar and gold are negatively correlated. So if you see gold going up, you'll likely see the dollar going down. So there are two markets that you'd always want to be keeping an eye on the other one if you're trading one. And again, there's when I said that we are using our discretionary income to buy more products, to buy more things that gold might be in. Again, the opposite can be looked at here in some ways. When you see that a global economy, when things are slowing down, when not necessarily a recession is coming into action, but when you see a lot of economies slowing, that is something that you will see. Sometimes people will be putting their investment into gold, knowing that it's a bit safer there. It has always been viewed as a safe haven, and we talk about cryptocurrencies all today. Obviously, you can't go 2 minutes without talking about cryptocurrencies or hearing about Bitcoin and how it's the new gold and digital gold or gold 2.0, whatever that might be. You look at all the uses that gold has, and you can't really compare anything that is happening there really with Bitcoin and with the same value like what we see here on screen. But bringing that back, I mean, when we talk about gold, we look at other precious metals on the market, and you can talk about silver, platinum. We've got palladium as well. Again, these are all similar items to gold, and they offer similar characteristics as gold as well, and often at a lower price. as well. So this is where their value can come in, and when we see the effects of supply and demand again within different markets around the world for gold, don't forget that it has some cousins there that offer some similar ways, similar functionality that might be usable in certain things, as we are aware. I mean, like I've mentioned this as well, already supply and demand is a big driver, and the notable producers in the world, obviously China is the biggest. You've got all the other notable producers there. You've Australia, US, Russia, South Africa, Canada, Ghana, Indonesia, and Uzbekistan as well, with the largest importing nation being India. And when we look at it, gold prices can react differently depending on the economies, and it turns out, and this in turn stems from different uses of gold from different nations. And that's, again, you think about how it might be used differently from different parts of the world, and that doesn't surprise anybody. I mean, if you were to think about currencies in that sense, and look at how the movement of gold has impacted them in different parts of the world, it's never more so than the dollar, and obviously the dollar being a major currency around the world, and a lot of other ones, a lot of other currencies moving off of it, especially with the forex trading, any sort of pairs that you've got. And when we look at that, I've already mentioned this, in that the dollar increases and the gold will decrease, but this is something that you should be aware of. If you're trading gold, if you're trading it, and I know that sometimes when you're starting out, you can't necessarily trade the same sort of size as some of the forex markets, but you have to have the dollar charts open if you're in a trade or looking to get into a trade. It's something that this is something that's really, really important, and the gold, any sort of movements in the dollar can really move gold as well, as people will have noted, and sometimes used to hedge against themselves as well. I know that that's something that people will often do. Okay, so the effects of a recession, and why we like to bring this up, and if a recession was to come, and as it has happened in the past, there can be a rush to gold, and people putting some form of investment into gold for one reason or another. It is looked at as a safe haven, as we mentioned, and also as other currencies devalue, and as they descend in value. That is why they're looking at gold, not only to just hold their wealth, and when you try to predict when that may or may not happen, whether that may or may not happen, it's simply viewed as a safe haven. It's not that a lot of people won't invest necessarily all their wealth or income into gold, expecting it to rally and shoot through new highs like some of the other markets that you might trade. But in saying that, there is a place for your income there that sometimes is a little bit safer from the effects of a recession. So as well, I mean, we talked about this already. I've gotten ahead of myself with that, and saying that when there's a recession, people look at it as a safe haven, and also when the economy can be grown because of that increase in discretionary spending, you'll see demand for the sort of goods that would have gold in them as well. So it's something that you can see the effects of it with going both ways, and certainly you need to weigh up those factors when you're entering into any trade within gold as well. So we'll move through. I do like to talk about a few other commodities as well, similar to gold. Obviously, because sometimes people will forget that sometimes there is more than just gold as an opportunity within the markets as well. And silver and some of the other precious metals will offer, as I say, some sort of similar functionality when it comes to products, and the demand for them can lead to can also move the market in similar ways. So, to go through a few of these, there are similar aspects that silver has when it comes to products and using them in electronics. It's a best electrical and thermoconductor amongst all metals. So certainly that is something that it has over gold, and it can be used as a medical instrument, within medical instruments as a disinfectant. And I'm sure people will have seen that, in any case that they've been into a hospital in that sense. It is, again, it's not as expensive. The main thing here is that it's not as expensive as gold, and that simply leads to potentially potentially more appealing opportunity for investors. And it does depend, obviously. Again, we have to think of supply and demand. Similar things play into our mindset when we're trading silver, if we wanted to as well. So be mindful of these things if you're going to be in these markets as well. I mean, again, so people are aware, if you're trading silver, the markets that are the most that produce the most amount of silver in the world are included here: Mexico, Peru, China, Australia, Chile, Russia, Poland, and so forth. There, again, I mean, these are something. Why do we mention these? And sometimes if you're trading silver and something drastic or dramatic happens in Australia or Mexico or somewhere that it's a high producer of, that might be an answer to why you see a sudden spike in your chart, or you see that something has happened in that market. Again, I mean, India again is a pretty prominent importer of both gold and silver. It's something that I'm not surprised. When it comes to mind, I'm not surprised really the population within India as well. So I mean, when you think about trading either of these precious metals, be aware that they do offer similar things to think about in terms of influences, and similar things in terms of the production of it, the effects of it as well. So again, we could I'm watching the clock here, and I may have spent a few minutes too long going through the beginning, but it's something that if you want to be mindful of when you're trading, again, the usage of silver, it can also increase volatility within the markets when you see that there might be a change in that sort of usage. And silver being a wider use for industrial purposes, gold has more than that within discretionary goods like your jewelry or electronics. But for industrial purposes, you've got silver there that when a strengthening economy can lead to an increase in demand for silver, more so than gold, for these reasons, simply because it is more widely used for industrial industrial purposes. So again, the one last thing, and something that it has as well, is scarcity. Scarcity, we look at the different assets again that have this sort of that scarcity. It's not endless, it's not limitless, and it's something that should always be something that, if you were to look at other asset classes and try to figure out, how much, especially with the way quantitative easing was going over the past few years, silver, gold, the fact that they were so scarce was something that led their value to, and will always be a factor in terms of determining the value of each of those commodities indeed. Yeah, and again, unlike soft commodities, and finally before we move on here, unlike soft commodities, grains or metals, gold and silver can be reused. It's something that it has over a lot of other commodities that you'll be seeing on the markets and trading across different markets. That brings us on to oil, and oil is, it's a really popular market, and there are lots of different types of oil markets out there that people can trade. Some move a little bit more than others. Some people like to hedge themselves within multiple markets. But to bring us back to basics, crude oil, what exactly it is, it's a commodity that's formed when the remains of plants and animals are covered in sand. and over millions of years the pressure causes them to turn into rock and then eventually into oil. And the extraction process, I'm sure everybody's seen the videos, films, images, or in the news, how much goes into the extraction process of oil. It certainly takes an awful lot and is a very expensive process in terms of digging deep into oil reserves to find these to find oil, and it can be extremely expensive for anyone to find it. In terms of the cost of it, it's something that when you look at the market itself, sometimes you'll see that there aren't actually that many that many places in the world that it's possible, which in and of itself can drive up the price for those places that it does. And when there is an increase in production, if there's ever a time for increasing the cost of production, that naturally leads to an increase in the value or in oil prices. And when I say that it's not it's not easily extracted in various parts of the world, in the most significant parts that you can, the 12 OPEC countries and together these 12 countries account for 75% of all the oil reserves in the world. This is again plays into the fact that there is very much a limited amount of supply here when it comes to oil, and while there are other nations around that have oil or may have oil in the future, these 12 countries really do control the price of oil and how it moves. And OPEC meet regularly, and you'll see comments coming out of any OPEC meetings can cause really aggressive and sudden movements within these markets, and it's always keen to be aware of when these events are taking place. You need to absolutely be aware of when OPEC meetings are taking place, because you'll see sometimes that people will come out with comments, or there'll be rumors of comments coming out of OPEC that are saying that they're limiting or they're cutting the production of oil in certain parts of the world, driving it up, and then only for moments later to be said that it naturally it's not, it was a rumor and that it was not true. And of course the market retraces, and then you feel like people are making money off of that sudden move for that sort of move, sudden aggressive move to happen. You feel like somebody in the know there caused that to happen and forced those moves. But these meetings and everything around OPEC can drive the price in pretty aggressive directions. So when calculating oil prices, a huge consideration is the fact that it's a finite resource. We know that, everybody knows that it is it's something that we, while we're not running out of it immediately, it's a finite resource and we're not going to be able to live off of it forever. One of the main things when it comes to extraction and how it can be done. The types of oil that's possible to be traded. WTI West Texas Intermediate, that's one behind Brent crude Brent crude oil, and like I said, sometimes you will see that you might want to hedge yourself in different oil markets if you're trying to trade one, but you wanted to have some security around that. WTI is produced in the USA, and Brent is in the North Sea. Both are high quality oils, and these oils again are they're refined and turned into the oil that we need and that we use in all of the things that we do to power a car, as electricity, heating. It works for all these products and more as well. So this obviously therefore means that WTI and Brent are very high, in a very high demand, and continue to be. And again, there will be that sort of demand for, if not an increased demand as supplies wane in the future. So in the short term, though, you will be able to see that these events and these, there's inventories put out every week, and you'll be able to look at what they are. Every Wednesday, if you wanted to see what sort of oil inventories are coming, are being produced, you can make sure that you're watching every Wednesday to see that if you're trading these oil markets. So globally, the largest consumers of oil is the States and European countries, and the largest oil consumers include the US, Japan, China, Germany, and the UK. So the biggest economies in the world. And so when trading oil, naturally you need to keep an eye on those nations that are consuming oil and their usage, whether that's going up or it's going down. That's something that again, all plays a part, and an increase in demand will tend to mean an increase in price naturally. So if you see that something has some data or some report come, a lot of these markets will move off of data and reports that come out. So be aware that these things can be due to, and will largely be due to, reports that come out. Those volatile movements are usually around these, and that's what I want to touch on here before we wrap up. So volatility and potential opportunities. So this does depend on one way that you're looking at it, and some people will look at volatility and steer clear of it. Some people will look at it as an opportunity, and the fact that it has so many uses naturally means that it is one of the most traded markets in the world. And for traders, there is opportunity out there. While volume isn't as good as what it used to be, certainly it's something that has hit the volume in the markets hasn't been the same for the last couple of years, but certainly there are still opportunities there in the market for people who are trading in this market. A lot of the volume that comes into the market will be around specific times, whether it is around those reports or opens and closes within this market. And famously, an example of this, when oil rose to a record high of $145 in June 2008, only to fall back down to $30 by December within the same year. So the record prices were caused by a combination of factors, most notably supply disruptions in Nigeria due to political factors, and combined with the belief there, as you can see, the increased demand from developing nations such as China and India that would outstrip supply. So these are all factors. A lot will depend on supply and demand, and we have to be aware of the supply and the demand side of the markets when we're trading them. It's something that it makes sense, but it seems pretty obvious. But if you're looking at a report, if you're not keeping an eye on inventories and you're just trading as you would another market, maybe you've only traded Forex markets, you want to make sure that you are keeping an ear out. If you're not touching, or you're interested in touching, there are certain reports that do come out regularly. The DOE put them out, released every Wednesday, as I said, and it'll indicate whether there's going to be a rise or a fall in the price based off of the demand for the oil as well. So the DOE will be the big report that comes out. Again, any periodic OPEC reports as well, they come out. Be aware of when they're coming out. Again, your economic calendar is your friend. Always have that open. If you can sync some of them up to your Google Calendar as well. So again, this is something that will help you to determine the value and the price and how much it should move. It's not something that's an exact science, but it certainly can help when you're making those decisions whether to trade, to get long or short the market, and in those intervals and around those times. So yeah, I mean, if you think about these are all clear and obvious signs of when oil is most used, and will drive the markets around based on the reports that come out here as well. So there you are. I'm finishing up now with with you, I'm going to pass you over to Nick. I'm aware he is probably sitting and waiting and watching the Fed minutes and listening to the comments that are coming out. I will pass you over to Nick now, and he will take over for the trade review as well. So I hope you enjoy that. And as always, guys, pop any questions to me. You can private message me on Yammer or send any emails you like to me as well. So hope you enjoy the trade review, and I'll be back next week for your next review or your next education lesson. But see ya.
Good evening, ladies and gentlemen, and welcome to this evening's trade review session. We've had a couple of decent trades today. Obviously, I've been journeying back from Cork this afternoon, so I haven't been particularly active this afternoon, but I did place a little Dow trade just before we started this session, and it generated a 30 pip profit. And the two trades that we did earlier in the day, both a gold trade and a Dow trade, were both nicely profitable as well. I think the gold we bought back near the low of the day, and the Dow trade was very close to the high of the day, so they couldn't have really been too much better. I have placed two orders, and I know it's caused a little bit of consternation and confusion just before we start this broadcast. So the piece of news is that Larry Kudlow has been appointed as President Trump's chief economic advisor. He's a regular contributor to CNBC, which is the market commentary that I often listen to, and he's going to be talking in about 7 minutes time or 6.5 minutes time to CNBC. So I may be completely wrong with this, but I'm expecting there to be a little bit of volatility Probably more so before he talks than when he talks, because he's a very experienced financial person, and I don't expect there to be too many or too much contained into what he has to say that's going to be taken up too wildly by the markets. But I think in the run up to it, we might see a little bit of volatility. So in the next 5 or 6 minutes whilst I'm talking, and we will have a look at, obviously you can see the charts in the background at the moment. So when I placed the order, the Dow Jones was trading about 24,790, or the futures were trading around 24,790. So what I was looking at was, if there was a big move to the downside, perhaps it might overshoot, be overdone, and then we see a rally back from those levels. So I'm looking to buy at 24,700. Equally so, if there was a push to the upside, I was looking to sell into any move that was potentially overdone as well. So I have a sell order above the market at 24,850, and I have a buy order below the market currently at 24,700. May well be that we don't get near either of them and that we cancel both of the orders at the end of the session, or it may well be that one gets triggered and we can hopefully take some profit out of that particular trade. So that's going to occur in about he's going to start talking apparently on CNBC in about 4 minutes, so we should start to see some movement just ahead of that. And the markets, the times that I've looked at them during the day, the markets continue to be quite choppy. We have these 5-10 point movements rather than movements in singular numbers. It tends to be we have 5-10 point movements, and that could be seen quite clearly with that trade that I did just before we started, when I sold at 24,810, and within a couple of minutes, it might not even been a couple of minutes, I was buying that trade back at 24,780. So overnight, the Nikkei 225 was down 190 points. The Hang Seng, which had been up earlier during the day, or had been trading higher earlier on in the day, closed down 166 points. So again, we're looking at that time differential. Nikkei 225 closes first, the Hang Seng continues trading, and we've seen the Hang Seng go from positive to negative within that period, which just starts to give you that softer bias to the way that the European markets are going to open. Now the Dow Jones has been down as much as 303 points at its lowest today, and we're going back towards those levels at this particular moment. It's going to be interesting to see whether we hold these levels or whether we start to break down even lower. As I've already mentioned, Larry Kudlow, or the big piece of breaking news, I suppose, is that Larry Kudlow is set to become the chief economic advisor. He's not really a protectionist as President Trump is. As I said, he's very experienced in the financial markets, and I think his appointment will be well received by the financial markets, coming on the back of the loss of Gary Cohen, who was also a very experienced financier and well respected by the markets. Now, we did speak last week when we were looking at the Pro Trader course, and I'm sure that Gareth has covered this many times for people who are on the Alpha course as well. The Dow Jones is a very small index. There are only 30 stocks, and different stocks at different times can have a significant impact on how the market is performing. Today is another one of those days. The price of Boeing has dropped as much as $16 at one point. It's currently down about $8, and that has about a 115 pip effect on the Dow Jones. So if we're down 300 points, at least 1/3 of that can be contributed to Boeing. And there are a lot of fears that the price of Boeing is going to go significantly lower. So if you're looking at any particular stocks, or you have a stock watch on your screen, the price of Boeing should be one that you do keep an eye on at this particular time. President Trump, I believe, is visiting a Boeing factory later on this evening, And again, there may be some comments that are made around that particular visit that have a significant effect on the market. There was a good bit of economic data today in the US. We had retail sales, core retail sales, also the PPI numbers came out, and the PPI numbers themselves have again reignited that inflation fear with the way that those numbers have performed. Mario Draghi was talking this morning. He was talking about the bond purchases and the fact that and the comments would lead you to believe that there's no particular great desire for the euro to trade higher from these particular levels. So we've seen the euro trade off a little bit today. We've been down as low as 123.45. We're currently trading at 123.74. But again, my bias, as it is with gold, and I want to talk a little bit more about gold because I was asked a few questions there earlier on today, which I want to address during this evening's conversation and this evening's trade review session. And the best performing stocks in terms of what's going on in the US at the moment are the FANGs, the Facebooks, the Amazon, and so on. And the Nasdaq, as you'll be able to see, is the best performing market in the US currently today. So what does the rest of the week hold? There isn't a great deal of economic data of any note tomorrow that's going to really move the markets that we look at. There is obviously this ongoing situation between the UK and Russia, where a number of diplomats have been forced to leave the UK today, and it may well be that story starts to gather a bit of steam ahead of the weekend and has some impact on sterling and again on the FTSE. But in terms of economic data that's really going to move these markets around before the weekend, probably the only thing that we're looking at are the building permits that are going to come out on Friday. So I believe that Larry Kudlow is probably on CNBC. I don't have a screen to show me that is definitely happening at this particular time. It was the time that it was supposed to happen. So we're looking at the Dow Jones here. There's a few things to note. First off, we've got the trade that we did this morning. You'll see that there was a lot of, the Dow was considerably higher first thing. We traded up as high as 25,170. That was about 8:30 this morning. And then we've got a lot of sideways movement. So you can see just that pressure or that inability to break through these levels was starting to gain throughout the course of the day. I mean, if we look at this period here, you're going from 7:30 this morning through to about 1:30 this afternoon, and you've got the market then starts to turn downwards, and again, it's a theme that we've seen a number of times over recent weeks, where we get this initial euphoria during the European trading hours, and we overshoot in regards to where the Dow Jones is actually going to open. Now, the Dow did actually open higher than the close that it had yesterday, but then, as you can see with those three candlesticks from 1:30 this afternoon, so it started a little bit earlier than sometimes we've seen. So from 1:30 this afternoon, obviously the number of sellers that were there in the pre-market area in the US stocks, a number of sellers were starting to build, and that's seen the market fall off through to the open around 2:30, and then we've collapsed back through that 25,000 level, and as I've already said, we're trading around 24,745 at the moment. So we've been down to a low of 24,725. So we've missed one of my limit orders by about 25 pips, but we're still trading down towards those levels. So there's a chance that we might get triggered. So we'll keep an eye on that as we're going through this evening session. So the idea of the OCO order, OCO means one cancels the other. So if you get filled on one of the trades, then you immediately cancel the other. There are ways on MT4 that you can place these orders. so that happens automatically. But the way that trade is structured, don't be worried about getting filled on both sides, other than if you get filled on one side, stopped out, filled on the other side and stopped out. If we trade in that range, there is potentially 150 pips worth of profit if both of those get triggered. The negative or the downside is if the order gets triggered and then gets stopped out, and then the second order triggers. So it's manual. If you have placed those trades today, we're currently still around 24,740, falling back towards that 24,725. You will see that earlier in the day we traded down to 24,685. I think there is a little bit of genuine support, a little bit higher than that. 24,700 would, for me, be overshooting that level of support, and that's why I'd be interested in buying at those levels. But as I said, if the trade doesn't trigger by 8 o'clock, then I think we'll probably close or we'll cancel both of the orders anyway, because it's unlikely. Or if it does, if the orders do remain live and we get filled into the close, that's not really what I want to be doing. So we'll keep an eye on it during this session, and the likelihood is that we will cancel both of those orders at 8 o'clock if neither are filled. So it's currently trading at 24,755. Like I say, the sale that we did today, and I know that people when I got out of the trade, I got out of the trade a little bit early, so I sold at 25,150. I bought back at 25,100. I was happy with that 50 pip profit. I know a few of you stayed in the trade. I know a couple of you have had really successful days with the Dow today. But if you've done that trade and you held that trade from 25,150, like I say, we've been all the way down to 24,700 and just below. So you've got the best part of a 450 pip movement on the day, which nobody is going to complain about. I'm just going to refresh the screen here. Obviously, Gareth is sick today, so we've had the education was given earlier. If anybody has any questions about what was spoken about in the education, or if anybody has any questions about the trades we've done today, or what we're looking at this particular time, or if people have questions about the OCO order, then please let me know, and I'm here obviously to answer your questions. So we start to look around the other markets. So the three trades that we did today, two of them are in the Dow, and then the third trade was in gold. We'll just have a quick look at the second trade that we did in gold whilst we're here, and you can see it's probably just reduced the time frame. So reduce the time frame down to a 5-minute time frame, and you'll see the trade that we did. We rallied up to 24,810 on this candlestick. And then we've immediately dropped off and gone all the way down to about 24,770. I bought back at 24,780, taken that nice little 30 pip profit. But as we can see, we could have taken a little bit more had we held on to that trade. There was an opportunity almost immediately after to do exactly the same trade. You could have sold again there at 24,810. Possibly even 24,815, and we've had a drop off there. So there's one trade there with a nice, well, there was at least a 30 pip profit, but you probably could have taken 50 pips out of that trade, and then reinitiated exactly the same trade, possibly even slightly higher at 24,815, and again we've had a drop off from those levels, and we're looking at a 5-minute chart here. So those two trades would have been 5, 10, 15, 20, 25 minutes, and you could potentially have taken 100 pips out of that. And I know that a few of you have taken big returns out of those Dow trades today. We've had messages coming back with people having returns of 100 to 150 pips, which is absolutely fantastic. We do have a question coming through. So Bunyod is asking, could I repeat what I've just said? I probably don't have time, Bunyod, but some of the volatility in the Dow and the gold today. So there's a few things. Obviously, Rex Tillerson was sacked late last night by Donald Trump, which has an impact on the market. We also have issues with the trade war is still ongoing. President Trump has appointed Larry Kudlow as his new chief economic advisor. So people are interpreting what that data is going, or what that appointment is going to do to the market. How different is he going to be to Gary Cohen? Is he a protectionist, as we see, or as we know that Donald Trump is? And what is there going to be an ongoing battle with Donald Trump in terms of getting some of the things done that they need to do? One of the comments that was coming around earlier, or again on CNBC before Larry Kudlow talked, was that if you toss a coin, it's heads, Donald Trump wins, and tails, Larry Kudlow loses. So Donald Trump will impose his will regardless of who is the chief economic advisor. But markets, again, they don't like this tariff war that's ongoing. They don't like the uncertainty that the economic data has given in relation to inflation. And inflation is always one of the biggest concerns to the market. So it raises its head, it goes away for a period of time, and then we see it raise its head again. So I'm just watching the Dow there as we go along. We rallied up to about 24,790. We're back down at 24,750. So you can see the choppy nature of the market. And even here on this 5-minute chart, again, if we'd sold as we rallied up to the 24,780 level, there'd be nice opportunities to take 20-30 pip profits as we dip to the downside. But obviously we need to get the direction right, and I'm hoping that one of our orders will trigger. But as we currently sit, we're right in the middle of the range. They're 150 pips apart, the two orders, and we're trading at 24,750 at this particular time. So we'll come back to the Dow before we finish this evening and see if any of those orders are getting closer. You can see when we look at the FTSE and the DAX, they're both trading towards the bottom of their ranges today. The FTSE has seen good support coming in around the 7,000 level. Obviously it's a key psychological level, and we do keep seeing support as we get down to those lines. So I think there are opportunities to buy around 7,020 and just below, and get the stop 50 pips away just below that 7,000 line. When we were talking on the trade review session, obviously we had that big movement up in both of the currencies, big movement to the upside in the euro, likewise in sterling, and I mentioned at the time, if we see 124.20 or 140.20, there were opportunities to short both those markets. Now we didn't quite get to those levels. You can see here we are during the course of, or very, very much earlier today. You can see we traded up to 123.95 as a high for today. But there were opportunities late last night, early this morning, to get short this market between 124.10 and 124.15. And anybody who did that would have seen a nice 50 to 60 pip return during the course of today. So the levels that we've given you there are holding well. The resistance line there at 124.26, it has been challenged once or twice, but if you do see moves back to those levels, it's almost like a no-look trade. You can pretty much put that trade on. Yes, there might be a breakthrough, and I spoke to a couple of you on Yama today about how often these levels are tested. There is no rule that I can give you that will give you an exact answer to that. I think the majority of times, from my own experience, the number of times that you'll see a level tested before you break through, either to the upside if it's a resistance level, or to the downside if it's a support level, you tend to find that you have 3 or 4 attempts at a level before there is any form of breakthrough. Then you're looking for that breakthrough to be confirmed. If we look at these occasions here, we've broken through the support, but not to any great degree, and your stop would have kept you safe on all of these trades. I mean, we've seen a high of 124.45, so none of these breakouts were confirmed. I don't know if you would call them false breakouts, but the breakout didn't continue. There wasn't the momentum that was needed to push the market significantly higher at these times. So one of the things that we talk about when we're doing the Pro Trader course is that when you get close to your support or your resistance levels and you're looking at possibly a move through those levels, the momentum needs to be good. You know, the market needs to be trading quickly, and you need to see an increase in volume. If we get up and we touch these levels and there's not a great deal of momentum and there's nothing really fundamental occurring in the markets, the likelihood of them trading through these levels and actually breaking out is very, very limited. And even on these occasions, you will see that the volumes wouldn't have been particularly good, and we've broken through to the upside, and we've maybe gone 5 to 25 pips to the upside on the biggest one of these breakouts, but then we've settled back down and traded down significantly lower from those points. So, you know, I suppose there's a couple of things: the need for that momentum and that added volume as you're getting close to these levels, if you are going to see a breakout. But equally so, when you when the level is tested a few times and it doesn't break through, then everybody or the inclination is for people to move the market in the opposite direction. So you can see from that last particular move there, we've seen a sell-off from those levels. I do want to talk about gold. I do want to keep an eye on the Dow just in case, and we're sort of still in the middle of that range at 24,767. So, you know, had I bought maybe at 24,725, we would have been looking at a slightly nicer trade at the moment, whereas at the moment it doesn't look like that we're going to hit any of our levels in the next 5 or 6 minutes or so. Just on gold, let me just clean up this screen because it has a few moving averages on it. And I've taken the support and resistance lines out, which I didn't mean to do because I wanted to talk about those. So I'm just going to put these back in really quickly. So we had resistance around 13.28. We had support at 13.16, maybe a little bit more. I'll just leave it there at 13.15.88. I'm not sure exactly where we were, but we're fairly close to those levels. Now we're looking at an hourly chart here, so you know a good time chart to be looking at in terms of some of the higher probability trades that you might want to be doing. And you can see that we've done an awful lot of trading in the range that we're currently within. So between that 13.15, 13.16 level on the downside and up to 13.28 on the upside. So one of the questions that came through earlier this morning was that, you know, when you look at the moving averages, and sorry, apologies for those who aren't on the Pro Trader course, when you look at the moving averages, all of the trading was above the moving averages, which gives it a bullish stance. But what you've got to always bear in mind is that we've seen strong resistance at 13.28. So if a market's trading at 13.26, 13.27, and you're approaching strong resistance, do you want to buy just off of a moving average? No, you don't. The most important part of what we do is about getting those support and resistance lines correct, and then what you're looking for based on those support and resistance lines, you're looking for that added layer of confirmation. So if the moving averages are confirming what you're seeing from your support and resistance lines, then yes, you go ahead and trade. If the moving averages are conflicting with what you're seeing from your support and resistance lines, which they would have been today slightly, then you can do one of two things. You trade with your support or your resistance line, or you sit on the sidelines and you don't trade because you've got conflicting information. Now I sold gold at 13.26. You know, I'm comfortable with the resistance line at 13.28. It's held firm for a long period of time now, and I have a negative bias or a short bias with gold anyway, because I believe long term we're going to go down and trade towards 1300 in the short to medium term, and I'm looking for us to test that 1300 level and possibly move lower. So my bias is to the short side. We're trading fairly close to a resistance level that I'm looking at, so my trade was always going to be to the short side from gold's perspective. So we sold at 13.26 very early this morning, and we bought back at 13.22. And if we look at the levels that we traded to from on the low side today, you can see that we went down to about 13.21.29. So we weren't far off buying at the bottom. You could possibly have moved your stops lower, but as we move back up to 13.24, 13.25, there is every likelihood that you would have got stopped out there. And like as I've already shown you, I took my profit when my profit was available. As gold stands at the moment at 13.25, ideally what I'd like to see is a move back up to 13.28 and give me that opportunity to get short the market again. So we just have a few seconds left, and before I finish off, we'll just look at the Dow. The Dow, unfortunately, none of those orders have been triggered, so we're going to cancel those now because I need to go home. So look, thank you very much for joining me. I will be available on Yammer again this evening if you have any questions, and I'll gladly answer those. And the market comment will be out to you early in the morning as usual. Thank you.